Hello, this is Cryptolyze. I hope you are well on this Tuesday, August 15, 2023. It will be a pleasure to meet you today to talk to you about a somewhat special project, Render. So there is a protocol that connects those who have computing power with GPUs and those who need it, implying professionals. So it's going to be very interesting to analyze this project. We're going to do it in two parts. A fundamental part, we will come back to what the project is, come back to its current events, and then we will go to the technical part to project ourselves in the short, medium, long term, and it starts right away. So what is Render? Render is a protocol that is built on Polygon, and the purpose of this protocol is to connect those who have graphics cards, therefore GPUs, and those who need them. Concretely, the simple use case is going to be, I'm a graphic designer or I'm a 3D modeler, so I actually create objects in 3D. Creation takes time, yes, but what takes a lot of time is being able to render. Rendering means designing, finally assembling the polygons and actually creating the clip or the object itself. And that requires a lot of computing power, and above all, it immobilizes your machine, therefore your PC, during all the time it does this rendering. And the idea is that precisely I need to keep access to my machine in order to be able to continue producing, for example, a new film, a new animation, this kind of thing where I need the computer to be able to do it. When you're in a big company, it's not a problem because we have what we call rendering servers, in which we will have specialized servers in which I will deposit my file, which will do the automatic rendering of this file. And afterwards, I will recover the work. I can continue to work. I just have to drop the files as I go into this server. The problem is when you're independent or you're a small structure, you don't necessarily have this type of infrastructure. You don't necessarily have the means to invest in a rendering server, and that in any case, it can take a long time even to be able to execute the rendering. It will depend on the amount of power we have, and therefore inevitably it will take a long time. The idea behind Render is to be able to make available all GPUs that are idle on the network. The more people we have with inactive GPUs, the more we can offer the use of these GPUs. For example, I'm freelance. I just finished a sequence in which I'm going to need to render. It's a sequence that would perhaps take 5 - 6 hours to finish and finalize on my PC or on my own server. I will go through Render, I will spend RNDR token to buy this computing power. And suddenly that implies that my rendering will not already take place in 6, but will perhaps take place in 2 or 1 even. Why not? Because it will consolidate all the GPUs. It's not 1 GPU, it's not 2, it's not 3, it's not 100. There's no limit, okay? It will depend on the prioritization that we will put at the level of the order that we will carry out and the number of RNDR that we will spend to be able to have. And that's really the principle. It's a notion of scalability that is almost infinite depending on the protocol. So I might even have a render that could be done in a matter of minutes depending on how much I'm able to afford. And that's really the strength of Render, is that it responds to a very strong problem that you can only have yourself in large structures, because the cost of this type of infrastructure is really just totally aberrant, and therefore suddenly we would have to have content continuously being rendered in order to be able to make this type of infrastructure profitable. There we have something that is made available and in which people, when I do not use my GPU, I can make it available to win Render, so win the protocol token call. And next, respond to a problem of a user or a company behind. So it's on Polygon, which is logical for the low gas fees. So the very low transaction costs and the scalability that we could have, as well as the interoperability that is carried by Polygon, which will be accentuated in particular, the transition to Polygon 2, with the inclusion of zero knowledge proof. So there's ZK rollup, which will be implemented at the level of the terms. So we will have an infrastructure which will be even stronger to be able to be used by Render. And suddenly Render, we have two possibilities. We either have the possibility of using their platform, therefore of directly depositing the files and having to pay an RNDR. We can design and build on top of it. Build, because we have an SDK, so a development kit and an API that is made available in which I can use and instantiate Render network in my infrastructure that I want to set up at my company level. So even large companies can use a Render infrastructure without necessarily forcing users to use the application. And that's the big strength that we can have, because we have a product that is already complete, in which we have a real need, because it's something that costs a lot of infrastructure and independent. That is to say that a freelancer, his day, if he ever has to do renderings, he will perhaps work 10 hours and he will spend 12, 13, 14, 15 hours, 8 hours rendering to be able to output what it needs. This means he will work 1 hour globally for either 1 hour of rendering or 1.5 hours of rendering. It is challenging to accept without a robust infrastructure to sell one's time. Thus, there is genuine interest in this. In terms of tokenomics, we're pretty good. We're at 68%, 69% in terms of the supply and circulation. So we still have a little bit of dilution. We're going to have a little more of 30% of dilution spread over a certain number of years. So we are rather calm, and we have a diluted market cap, which is at 825 million, so which is relatively low. So it's a big advantage. It means that we have a margin of progress, which can be substantial. So be careful. Again, Render is a protocol. That is, it is an application and interconnection layer that is created on top of Polygon. It's not a blockchain per se. It uses the blockchain to connect. So that also means it's technology dependent. Below so implied Polygon. So the more we have Polygon scaling, the more Render will be able to scale and evolve. At the level of the negative points, it must be taken into consideration that this is a response to an industrial and societal problem, in which indeed we have a problem of scalability, we have a complexity in terms of GPU management, we don't necessarily have the capacity to have everything. And so that's an answer. So that implies that if ever we find other solutions or if ever there are other competitors who are more centralized, more accessible, Render will suffer. Same, if ever we increase the rendering capacity, so that is to say we increase the subsidiary calculations and we reduce the difficulty of the calculations, we will then have a less strong need at the render level. And the same, we don't forget that we are part of the blockchain world. So always implying that a minimal part of the ecosystem understands what blockchain is and who will use blockchain products. So we take a little step back from that. And it's important to see precisely in the arrival of the mass edition how it will be done. We are attacking the technical part in which we had a launch of the token, which was relatively expensive, which is rather logical. We had to have a very strong incentive from the start to be able to attract people and put available their GPU. Then we had dilution, which led us to this very strong bearish breakout and this bearish flow in which we had a very nice accumulation, therefore a very, very well done finality in which we had the first batch, which was carried out with Terra Luna, then Celsius, and a very strong ranging period in which we did not have a breakout with FTX. We didn't have any breakouts with pure endogenous elements to the crypto, so we had something that was really very clean in terms of wake-off accumulation. There, this whole part is an accumulation of wake-offs with a first break-off structure, which was carried out, and the second, which was validated. So we did have the break in this zone of ranging and accumulation of wake-off with the bullish movement effective retest, and then we validated with a second break-off structure. And even in terms of pure and hard structures, we will see that we are in a dynamic that is bullish. We have highs that are higher and higher, and we have lows that are higher and higher. Even if here we went to do a minimal break of structure on it, we take it into consideration, which is rather a sign here of a short-term downward momentum, therefore of a short-term pullback that is taking place, which is at the same time logical because when we look at the bullish impulse with the retracing and this Fibonacci extension, we see that we have reached the 1.1. So the classic objective at the level of this impulse continuity. So here we are more in a retracing phase, which could be in 3 steps. Here, hop like that to go a little lower. Especially since we did the break of structure here, which for me is not a protected lot. So it's normal that we go get it, and I think we'll go get cash a little slightly lower. We will look for liquidity at the 1.38 level, in which here we have the break of a reaccumulation. So we have a small order block waiting for us to look for, and which would correspond here to levels retracement classics. If we take the total movement that we had from the lowest to the highest, so which is the movement here in 3 times, in which we made a passage below the 0.5, and we can clearly see that the level of the order block corresponds to the 618 at 1.36. So it would make sense to have this price call. And even if we were to go a little bit lower, I think it wouldn't be a problem. The lot is really at 786. We could just have a retest here. And we could even consider that we are in a dynamic of a wave 1, wave 2 with a retracement which could be stronger at the level of the retests of the $1 before being able to start again and make a big 3. In any case, what is certain is that we have here a protocol which corresponds to a certain demand at the level of the ecosystem of developers and artists 3D. We see that there are more and more requests on that side, and it makes perfect sense to need the computing power to be able to do that. So what target could we have at the render level? Already, we have a target that is linked to the 18 market cap. We are at 800. we will say 850 million. To make it simpler, we have 850 million market cap. If we were to seek a strong enough membership in which we will have an RNDR, which will be valued according to use, with a bull run which will be put in place, and therefore a part of speculation which will happen, we will certainly end up on a market cap that can be X10, X15, or even why not X20. That would bring us to a market cap in the vicinity of 20 billion, okay? As a reminder, the top techno blockchain layers that were on the previous bull run were around 80, let's say between 80 and 60, okay, to have a good average. So what would make sense in a future bull run? So with higher membership, to have a protocol that's built on top of a blockchain like this, to have a valuation somewhere around 10 to 20 billion. That seems quite logical to me. So that already gives us a good target for RNDR. And if we considered that we were in a big wave 1 and a big wave 2, let's say, okay, so big wave 1, big wave 2, we draw an extension from the bottom, we're going to look for the top of the one, we would go looking for the top of the one. So let's admit we're going to retrace a little bit harder for the one. Generally, we tend to retrace. We're going to retrace here. That would give us a first target with an RNDR at $5, and then a second target with a retest of the ATH in the vicinity of $7. These are targets for a big wave 3 if we would look for a big wave 5. So end of bull run, and therefore, as I said, potentially on X10, 15. That implies that we will have a token which would be around $17, therefore higher than $15, therefore which will give us a very good target. Once again, we pay attention. It is undercover 1 of the functioning of RNDR and the use of its token, and 2 of the arrival of the bull run with a speculation phase, an injection of liquidity on the protocols, which leverage, therefore, which uses the blockchain to offer added value, and which for me is the case of Render. I hope you liked this video. If so, I'm sure you'll love the video I made on Caps, Tournois Crypto, a small French project made in France, which specializes in NFT through the creation of a specialized blockchain for NFT and NFTs that would be private and augmented NFTs. I'll put the link here and see you tomorrow for a new video.